According to the Times of India, a young Canadian defense tech startup called Dominion Dynamics has just raised about $98 million in a major series round, and the story is being framed by many as the rise of Canada's Palantir. Today we'll unpack why this matters for stock investors who follow Palantir, defense technology, and the broader geopolitics of the United States, Canada, and NATO. According to the Times of India News, Dominion Dynamics has now raised roughly $169 million Canadian dollars since launching last year. Its ambition, in the words of CEO Elliot Pence, is not just to build another contractor, but to build a large Canadian defense prime that can, over time, reshape the country's defense industrial base. For investors, that phrase defense prime should immediately bring to mind names like Lockheed Martin, Northrop Grumman, and yes, Palantir on the software and data side. The Times of India mentions that this funding surge is happening against a thorny backdrop in US-Canada relations and a shifting NATO landscape. On the one hand, you have Washington's occasional skepticism toward Canada's defense spending levels, and on the other, you have a growing strategic focus on the Arctic, on high-latitude surveillance, and on hardening Western supply chains away from adversarial powers. Defense software and sensor networks are right at the center of that shift. From the perspective of stock investors, there are several angles to consider. First, the competitive and partnership landscape for Palantir itself. Second, the signaling effect this has on institutional appetite for defense AI, surveillance platforms, and autonomous systems. Third, the implications for NATO-aligned defense budgets and how much of that spend will go into software-heavy platforms instead of purely kinetic hardware. According to the Times of India, Dominion Dynamics is focusing on two flagship systems, AuraNet and Scout. AuraNet is described as a surveillance and data-sharing platform built to operate in harsh environments, especially the Arctic. Scout is an autonomous system intended to extend the operational range of crewed fighter aircraft. For investors familiar with Palantir, AuraNet's description immediately echoes some of Palantir's strengths in integrating sensor data, enabling real-time mission planning, and providing battlefield or theater awareness. Let's start with that, the AuraNet angle and how it rhymes with Palantir's operating thesis. Palantir's core value proposition has always been about integrating disparate data streams into a single operating picture, layered with analytics, AI, and decision support tooling. Whether you look at Gotham for defense and intelligence or Foundry for commercial clients, the pattern is, pull in data, standardize it, enrich it, and push it back out as actionable workflows. Dominion's AuraNet, as described, serves as a surveillance and data-sharing platform with Arctic-hardened sensors. During a Canadian Armed Forces exercise, Canadian Rangers reportedly used it for mission tracking, planning, and real-time communication. This is very similar conceptually to how Palantir is used in exercises and combat operations to stitch together satellite feeds, drone video, radar, logistics data, and frontline reporting. For stock investors, this matters in a few ways. First, it reinforces that the demand for data-centric command and control platforms is not just a US or UK phenomenon. Canada, which historically has been underweight in defense tech, is now actively funding exactly this category. That supports the broader thesis that software will capture an increasing share of defense budgets, especially for situational awareness and autonomous operations. Second, it highlights how much room there is for regional champions. Palantir is a global player, but defense procurement is deeply political. Governments often prefer domestic or allied country suppliers for sensitive capabilities, particularly those tightly integrated with national infrastructure and intelligence networks. Canada building a homegrown Palantir-style platform for Arctic surveillance is a textbook example of this. Third, the Arctic focus is strategically important. Melting sea ice, new shipping routes, resource access, and great power competition among the United States, Russia, and China make Arctic surveillance a long-duration theme. Technologies built and validated in that environment can have strong export potential to other cold weather or remote theater militaries, and they also showcase ruggedness and reliability. For Palantir investors, this underscores that Arctic and high-latitude domains are becoming very real, funded use cases. According to the Times of India, Dominion is not just a software shop. The company has opened a 25,000 square foot manufacturing facility in Ottawa and a development office in Toronto, and it is recruiting engineers from firms like Anduril Industries, Tesla, and Alphabet. That blend is telling. It suggests a business that straddles hardware, sensors, autonomous platforms, and software orchestration similar in spirit to Anduril's model, where integrated systems matter more than pure SaaS. For investors comparing this to Palantir, one distinction is that Palantir is asset-light and focused on software and data platforms, often integrating with partner hardware. Dominion looks more vertically integrated, supporting its own hardware footprint for the Arctic and for autonomous aircraft extensions. Neither model is categorically better, they simply have different capital intensity and margin profiles. But both sit in the same structural wave, the replacement of legacy, siloed, government-owned systems with faster, more iterative, commercially flavored defense tech. Let's talk about the macro tailwinds described in the article, because those are highly relevant if you follow defense names in public markets. According to the Times of India, CEO Elliot Pence points to a range of geopolitical developments that have catalyzed defense spending in Canada. These include U.S. skepticism toward NATO burden sharing, as seen under the Trump administration, and broader questions about North American defense integration. The article mentions occasional remarks about Canada and Greenland, underscoring concerns that Canada needs to carry a larger share of the defense load in the Arctic and the North Atlantic. From an investor standpoint, the bigger story is that NATO countries are rearming and shifting their procurement philosophy. They are gradually transitioning from slow, risk-averse, heavily paper-based programs to more iterative, software-driven, commercially oriented procurement. This is not just about Canada. You see it in Europe, in the United States with initiatives like the Defense Innovation Unit, and in the United Kingdom with its recent push for AI and autonomy. Palantir has been a prime beneficiary of this shift in the US and European theaters. It has won contracts by demonstrating actual capability in live environments rather than just promising future performance. Dominion Dynamics is essentially attempting the same playbook at a Canadian national level: build quickly, deploy in real exercises, iterate fast, then scale into major programs of record. According to the Times of India news, Pence is explicit about the cultural shift he thinks is needed. He argues that Canada is too risk-averse and that government agencies should emphasize learning through experimentation. His quote is that they want to make mistakes quickly and rapidly so they can learn quickly and rapidly, and that for Canada's defense industrial strategy to be implemented, the country must transform how it thinks about mistakes and risk. This matters for investors because defense procurement has historically been one of the biggest bottlenecks to growth in this sector. Legacy processes favor giant incumbents and slow-moving programs. But as governments adopt faster, milestone-driven experimentation, there is more room for agile players, including software-first companies. That is exactly the environment where Palantir has excelled, and where other venture-backed defense firms like Anduril and now Dominion are trying to operate. The Times of India also notes that Canada has introduced a new defense investment agency to accelerate procurement. However, at present it focuses on contracts larger than 100 million Canadian dollars, leaving many smaller projects outside its scope. This is an important detail. Early-stage, software-centric projects usually start small and grow. If Canada's accelerator only handles huge programs, that may still leave a bottleneck for promising, experimental tech like AI-driven targeting, autonomous systems, and edge compute sensors. For Palantir investors, there are two key readings here. One reading is that Canada's current structure might slow the rollout of smaller, innovative software deployments, which could limit short-term contract flow to disruptive vendors. The other, more optimistic reading, is that pressure from companies like Dominion will force additional reforms, gradually opening more doors for agile firms with proven capabilities. Either way, the direction of travel is clear. Canada is publicly talking about procurement speed, experimentation, and learning through failure. Those are precisely the cultural ingredients that have made Silicon Valley-style defense tech viable in the United States. Now, let's look at the sentiment and political backdrop. According to the Times of India, Pence believes public support for military investment in Canada will remain strong, even if some of the current momentum fades. He notes a broad recognition that Canada's military is not equipped to fight future wars and argues that Canada must view defense as something it builds at home, instead of simply something it buys from abroad. For investors paying attention to the defense investing backlash in some regions, this is notable. There has been institutional resistance to defense exposure, especially from funds with environmental, social, and governance mandates. Yet in practice, the war in Ukraine, tensions in the Indo-Pacific, and concerns about Arctic sovereignty have shifted public opinion in many NATO countries. There is increasing framing of defense as a form of national resilience, not just aggression. The article notes that although investor interest in Canadian defense companies has increased, structural restrictions still block some funds from investing, particularly those that avoid offensive military technologies. This creates a segmented capital market. On one side, you have large pools of capital that remain restricted or hesitant. On the other, you have a growing set of specialized venture funds, family offices, and sovereign-aligned capital willing to back defense AI, surveillance networks, and autonomous platforms. For a public company like Palantir, this segmentation can be a double-edged sword. Limited participation from ESG-restricted funds can cap index-driven or mandate-driven demand in the short term. However, as attitudes evolve and defense gets reclassified by some as a security or resilience theme, there is upside from potential mandate shifts. In addition, the presence of enthusiastic, thesis-driven capital means that the most committed investors are often those who understand the multi-year nature of the defense software thesis. Dominion Dynamics' ability to raise a large series relatively quickly is a real-world signal of this shift. It shows that at least some investors believe the combination of AI, autonomy, and defense-focused hardware in a NATO country can be a long-term growth story. For Palantir shareholders, this is indirect validation. The market is increasingly willing to fund companies whose entire product is oriented toward defense and national security, not just dual-use tech. Now, let's talk about competitive positioning and possible scenarios going forward. One scenario is that Dominion Dynamics matures into a true Canadian defense prime, owning integrated systems for Arctic surveillance and fighter support, and expanding into other domains. In that world, how does Palantir fit? There are a few possible relationships. First, Palantir as a collaborator. Palantir's platforms are built to integrate with a wide variety of sensors and autonomous systems. Dominion's AuraNet and Scout could theoretically feed into a higher-level decision layer provided by Palantir, especially for allied operations that include US or other NATO assets already running Gotham or Foundry. In this scenario, Dominion supplies specialized, Arctic-optimized networks, while Palantir provides broader, theater-level data integration and analytics. Second, Palantir as a competitor. Dominion's description of AuraNet as a surveillance and data-sharing platform is conceptually close to Palantir's work in defense situational awareness. If Canada prefers to keep core tactical networks mostly domestic, Palantir could face competitive headwinds in some Canadian programs, or might be constrained to more limited roles. This is not necessarily new. Similar dynamics exist in other countries that want local champions. Third, Palantir as a model. Dominion clearly draws on the broader playbook pioneered by Palantir and a few other defense software pioneers: deploy fast, prove value in the field, work closely with operators, and iterate in live exercises rather than waiting for multi-year requirements documents. Regardless of direct competition, this approach strengthens the overall legitimacy of defense tech as an investable asset class. From an equity perspective, the rise of companies like Dominion does not automatically dilute Palantir's long-term opportunity. The global defense software market is large and still underpenetrated. Most militaries are at an early stage of digitization and AI integration. That means the main challenge is not over-competition, but rather slow adoption and procurement friction. If more companies help break those cultural and bureaucratic barriers, Palantir may actually benefit as budgets and expectations shift towards software-first solutions. Another nuance for investors is the geopolitical diversification of defense tech players. If you are building a long-term portfolio around this theme, you have to consider jurisdictional risk, export controls, and alliance reliability. Palantir is US headquartered, with deep ties into US and allied intelligence. Dominion is Canadian-based, focusing initially on Canadian and Arctic needs. In a world where supply chains and tech stacks increasingly align along alliance lines, having multiple trusted vendors across different NATO countries can be a feature, not a bug, from a strategic perspective. According to the Times of India, Dominion's expansion plan includes hiring from Anduril, Tesla, and Alphabet. This reveals the type of engineering profile they are targeting: people comfortable with autonomy, AI at scale, advanced manufacturing, and fast iteration cycles. That is another echo of what we have seen at Palantir, where top-tier software talent from big tech has been drawn to the mission-driven nature of national security work. For investors, this matters because talent is a gating factor in this sector. There are not many teams that can simultaneously navigate classified requirements, cutting-edge AI, and large-scale deployment reliability. The companies that manage to attract and retain this talent are more likely to emerge as long-term leaders. Let's step back and connect this to the broader thesis that many Palantir bulls hold. The thesis is that we are in the early innings of a multi-decade transition, where data, AI, and software intelligence will be as decisive in national security as aircraft carriers and tanks. Palantir is positioning itself as the operating system for this new form of warfare and defense planning. The rise of regional analogs like Dominion does not break that thesis, it reinforces it. Every new defense tech startup that successfully raises capital, wins contracts, and proves real-world use cases contributes to a narrative shift. Defense ministries and treasuries see that software-driven solutions can deliver value quickly. They start budgeting more for these categories. They adjust procurement processes. They begin to institutionalize agile experimentation. Palantir, as a first mover with strong deployment experience, is well positioned to capture a significant share of that expanded pie. Of course, investors should also remain aware of the political and regulatory risks. Defense funding is not just a function of technology, it depends on elections, fiscal constraints, public opinion, and alliance dynamics. According to the Times of India, Canada's current posture has been shaped partly by concerns about U.S. reliability and by pressure to meet NATO commitments. If global tensions were to ease dramatically or if political coalitions turned sharply against defense spending, some of the momentum behind both Palantir and companies like Dominion could slow. However, based on current trajectories ranging from Ukraine to the Indo-Pacific to Arctic competition, the baseline expectation among many strategists is that defense and security will remain high-priority domains for years to come. In that context, the emergence of Canada's Palantir is not an isolated event. It is part of a wider structural re-rating of defense tech as a legitimate, and potentially attractive, area for capital deployment. So, what might investors watch for going forward? They might watch how quickly Canada's Defence Investment Agency and related reforms trickle down to smaller, more innovative programs. Faster, more flexible procurement would be a strong signal that companies like Dominion and international players like Palantir can scale their presence in the Canadian market. They might watch whether Canada formally articulates an Arctic defense doctrine that explicitly prioritizes digital networks, autonomous systems, and real-time data platforms. If that happens, platforms in the AuraNet and Palantir Gotham family become even more central. They might observe how institutional attitudes toward defense exposure continue to evolve, especially among large pension funds and sovereign wealth funds. Structural restrictions are still in place, but the more governments frame defense as resilience and deterrence, the more space there will be for long-only capital to participate. And finally, they might track the emergence of new cross-border collaborations. Could we see joint exercises where Dominion's systems and Palantir's platforms interoperate? Could there be joint bids for NATO-wide projects that require deep Arctic expertise plus global data integration capability? These are early-stage questions, but they illustrate the range of scenarios that might unfold. According to the Times of India News, the CEO of Dominion Dynamics summarizes his mission succinctly: the ambition is to change the country by building a large Canadian defense prime. For investors in Palantir and in defense tech more broadly, the key takeaway is that we are witnessing the early stages of a new industrial era in national security, one built on software-defined capabilities, real-time data, and autonomous systems. Palantir has been one of the earliest and most visible public market plays on this transformation. Dominion Dynamics represents the same wave, expressed through a Canadian lens. Taken together, they suggest that the defense tech opportunity is not confined to a single ticker or a single country. It is a global, multi-decade restructuring of how nations deter conflict and defend their interests. Thanks for listening to this episode. If you found this analysis helpful, please consider subscribing and sharing it with someone who follows defense and technology investing.